let's start with today's presentation. Firstly, we'll look at a quick review of budget highlights. After that, we'll look at uh, market outlook on technically, and after that, we'll discuss budget in detail with fundamental analysis. So first point of the budget is that is a very much popular decision, that is no tax up to rupees 12 lakh. Individual earning of up to rupees 12 lakh annually will not have any we have to pay income tax, which is positive for consumption, auto and consumer durable sector. Then next is Kisan credit card limit for farmers, fishermen, etc. increased from 3 lakh to 5 lakh to boost Atmanirbharta in urea production. The government has received 3 dominant urea plants in the eastern region, which is positive for agriculture once again. Then a proposal of rupees 1.5 lakh crore is made for 50 years interest-free loans to states aimed at capital expenditure and incentives reforms positive for infra. Then next is the top 50 tourist destination will be developed with states through a challenge mode. The states providing land for key infrastructure, which is positive for tourism industry. The development of at least 100 gigawatts of nuclear energy by 2047 is essential for India's energy transition efforts. Nuclear energy mission for the research and development of small modular research, which SMRs, will be launched with the outlay of rupees 20,000 crore, which is positive for energy sector. And the direct FDI limit for the insurance sector will be raised from 74% to 100%, which is positive for infrastructure companies. And lastly, footwear and leather sector schemes to generate employment to 22 lakh people and generate investment of 4 lakh crore and investment increase exports over 1.1 lakh crore, which is positive for footwear and companies. This is a small key highlights. We'll discuss in detail afterwards. And now let's look at market. Technically, I'm sharing my screen here. So yeah, just a minute. So yes, firstly we'll talk about in Nifty here. After the budget, what here change and what we will see Nifty from here on. So firstly, we'll look at a monthly chart of the Nifty. Here we can see since last 4 month, Nifty gave a negative return and form a bearish candle pattern on the monthly chart. And today is the first day of the 5th month, which is for the correction. And today, if you see a weekly chart here, so in the current week, Nifty here form a bullish engulfing candle pattern, and it's engulfed previous 2 weeks as well. The current closing of the Nifty is 23,499. If you see Nifty is actually corrected from top here around, if you see, around 12% here, and since every 1.5 years we'll see that correction around 10%. So this is a normal correction. If you see, major levels to watch on the Nifty side is important immediate support zone for the market is placed at around 22,800. If it breaches that level, then only we can see some fresh selling. Otherwise, a market has given a strong breakout candle here and big bullish candlestick pattern at major support level. However, immediate hurdle for Nifty would be placed at around 23,850, followed by 24,250. 24,250 will be the trend reversal level from here on. If Nifty sustains about 24,250, then we may see some further upside and to a near fresh lifetime high. It's a lifetime high and fresh upward target if you see. So we can take as we have discussed in the last session, that budget peak session, that if you see a Fibonacci extension level, so upward target, if Nifty crosses above life high, which is 24,266, then it will move up towards 27,600 level. However, this analysis, if it Nifty sustains about 24,250, then only this will happen. Otherwise, it has a major resistance zone at 24,250. So here on market is for the short term market is showing some kind of bottom forming, but yes, it need to confirmation, and if it sustains about 23,850, then only we can see some that we can argue that the bottom is Nifty is forming short term bottom. Till then, market has immediate support placed around 22,800. If Nifty breaches below 22,800, then it will move further down towards 22,000 to 21,800, which is its next support level, which has a multiple support, multiple touch point level as well. As far as the Bank Nifty is concerned, so here Bank Nifty, if you see, so Bank Nifty also form a bullish engulfing pattern on the weekly chart here. If you talk about percentage wise, so percentage wise also Bank Nifty corrected till around near just here. If you see Bank Nifty also corrected near around 12% in this correction. So this is a, we can say, a normal correction which has happened every 1.5 to 2 years. If Bank Nifty has important levels to watch on a higher side would be at 50,800. If it sustains above 50,800, then Bank Nifty will also move towards its life high, which is placed at around 54,460, and after that it will move up towards, if you see, so 56,400 will be the next target for the Bank Nifty in coming months. Major support for the Bank Nifty is placed around 47,800, which is its recent swing low, which will act as a major support zone for the market. Next, we will see a broader market. If you see, so broader market here, if you see, so broader market is at major support zone, and broader market also corrected near 15%, which has made a low recently, and currently it is at around 12% down from its lifetime high. So here also we can see Nifty 500, which is a broader market. The strength of the broader market is very much weak. Actually, around mostly about 24% stock is above its 200-day moving average, and 40% stock is above its 20-day moving average. So broader market is also showing some kind of weaknesses, but still, if you see a weekly chart, there is a major support zone, and it needs a confirmation that if it sustains about 22,000 level Nifty 500, then only we can see some further bottoming out process. Otherwise, it is in a dicey mode till now. From the budget perspective, if you see a important sector to watch, the first sector is at Nifty consumption. So Nifty consumption stock sector here, and if you see Nifty consumption sector, so here Nifty consumption sector actually corrected 17% fall from its life high, and currently it is at around 15% fall from life high. If you see a Nifty consumption here on the monthly chart, it is strongly in a bullish run, and it get a small correction here. If you see a weekly chart here, then on the weekly chart, it formed bullish candlestick pattern on the weekly chart and forming a major support. So Nifty consumption sector will be on the focus of after the budget. Next sector would be at Nifty auto. If you see Nifty auto here, we can see a Nifty auto on a weekly chart. So here Nifty auto taking a strong support near its immediate support zone of 23.6% Fibonacci retracement level support, and Nifty auto will be the next sector which will perform from here on. So we have to wait, we have to keep a watch on Nifty auto as well. The next sector would be Nifty consumer durables. So Nifty consumer durable sector, if you see, so Nifty consumer durable sector is at a major support zone of its upward rising trend line, and it has an immediate hurdle at around 40,000. So if it sustains above 40,000 level, then we may see some further upward momentum. However, on a monthly chart, if you see on Nifty consumption sector, so here also it's showing a small bounce back from its major support zone, which is forming since from 2023 level, which is a trend line support. Next support or next important support, next important sector I would say, which is Nifty FMCG. If you see Nifty FMCG sector, so on a weekly chart here also you can see Nifty FMCG sector sustain above its 5-week high, and on daily chart as well it is sustaining at 5-week high level. So Nifty FMCG sector will be the next important support to look at after the budget. And lastly, if you see, so Nifty Pharma. So Nifty Pharma actually corrected from top, which is around, sorry, just a minute. So Nifty Pharma also corrected around 13% if you see on a chart, and Nifty Pharma forming a hammer kind of candle pattern on the weekly chart. So Nifty Pharma will get a bounce back from here on, which has a pharma sector announcement after the pharma sector announcement, which is a in the budget. So this is a technical outlook of the market. Now I am handing over to Dibandu. Thank you very much.
Okay, so let's start with the budget highlight. What happens in budget? What were the key highlights of the budgets, and what were the positive and the negative of the budgets? Before going ahead, let's say budget was on neutral, so it was not much good, or it was not much negative in the budgets, as uh, government has taken certain steps where they have supported the consumption sentiments, as well as with that they have what we have before expected, that we have made before the budgets, where we have shared our expectations, such as like government will cut the tax rates for middle class, and there will be some capital expenditure supports by the government to support these budgets, where the spending and consumption will be improved. So some of the expectations which has been made by the government, some of the expectations which haven't met, or haven't in line with our expectations and market expectations, and somewhere around the budget was sometimes was some point were on was not expecting by the street, and whereas there was tax cuts and has supported the consumption. So let's look at the key priorities of the budgets in today's budget. Was around investment, MSME supports. Government has supports the agriculture sectors also by launching different schemes, by supporting the agriculture sector uh, like with new seed generic helps, and with climate conditions helps also will be provided towards the agriculture, and this kind of supports has been committed by the government and will be supporting the agriculture also. There has been some rural development key points also, as well as government has also promising in the tourism sectors also. So now let's look at the key positive points for the budgets. So which was towards the power sector, where government has announced that they will be developing at least 10 gigawatt nuclear power energy by 2024. So by 2024, government is planning to take the nuclear energy capacity by 100 gigawatts, and for these sectors there will be for power sectors and nuclear sectors, there will be a key positive for the players which who are in nuclear business as well as in the power generation business also. Next is from infrastructure. So this has been a quite disappointment. So we will discuss on the next slide with our key disappointment things. So let's look at what are the key things which has been introduced in infrastructure. First is that they have government has approved for interest-free loans for capital expenditure for next 5 years, and this will be done through 1.5 lakh crores. As well as with this infrastructure, government has also continued with Jal Jeevan Mission, which was earlier at around somewhere around 6 lakh crore, which has been continued this year also. And if we look at the capex, so this year the capex was around 11.21 lakh crores, and compared to previous year, that was around 11.1 lakh crores only. So infra, more or less, infra was on flattish growth, and there has been no major allotment towards the infrastructure uh, sectors. Coming to the tourism sectors, so the government is planning to develop a 50 tourism destination place, which will be executed through states government by developing key infrastructures for hotels and as well as for the tourism sectors, which also includes your medical tourism as well as the uh, other private tourism sectors also. So tourism will be a key beneficiary for these sectors. So next is from agriculture sectors. So there has been some key initiatives taken by the government in today's budget sessions, which will likely to support agriculture sectors. So firstly, government will support the urea production. So we have witnessed in previous before budget we have seen some shortage for urea, which was the key concern, as if urea goes up, there will be major impacted in your agriculture, and which will be drive higher inflations for your core basic consumption. So looking at this problem, government has declared 12.7 lakh metric ton urea new capacity, which will be developed in Assam. So this is a key development towards the agriculture, as well as government has introduced some of the schemes which will support cotton production, as well as apart from this, the government has also introduced different kind of generic seeds for the consumptions, which include your dal, rice, these all basic needs for pulses. So this has been also introduced in this budget, which will be supporting the agricultural sectors. Last is your insurance. So there were before the budgets, there were expectations that which were the three key assumptions that in insurance sector there will be a reduction in GST in your premiums, as well as there will be a one key license for your different set of insurance. And third key assumption was that FDI limits will be go up to 100% from 74. So from these three assumptions, one of the assumptions has been approved by the government, which was the FDI limits. So they have a company. So government has pushed the FDI limits. So now FDI can invest around 100% in these sectors. So this will be beneficiary for the insurance sectors. Now let's look some disappointment from the budget perspective. So capital expenditure, which was capex. So we were and budget street was expecting more on capital expenditure. So earlier it was around 11.11 lakh crores. So street has expected that there will be a more than this amount, so which has not been introduced by the government. So government has allocated only 11.1 lakh crore, which is a 0.8% YY basis growth. So capex was main focus in this budget. His main highlight that there will be some capital expenditure which will boost the government as well as the private capex, and this will create job opportunities, and whereas will increase the consumption power for economics. So this has not been taken. More or less, it was slightly on negative as they haven't increased any target for the capital expenditure. So, as capital expenditure has taken a setback, so two major sectors which were in focus was expected that there will be a major allocation towards these two sectors were not taken place. More or less, defense and railway has closed on a uh, flattish allocation. So earlier what defense around the defense sector has been capital expenditure of around 1.8 lakh, where it was where earlier around 1.72 lakh crores. So not much allocations has been allocated to this sector. As similar we can see to the railway sector. So railway and defense was on a flattish note. So this was also a disappointing note for the street. So as well as we have seen the sector stocks has started to falling on that as there were no major allocation has been taken. Looking at the other important highlights was the government has remained on a prudent fiscal deficit as government targets to a fiscal deficit of 4.4%, which was earlier 4.8%. So government has maintained this fiscal consolidation, which will be beneficial for our Indian economy. Next is that the government has also reduced the basic consumption duty on 36 drugs which are used to treat for cancer and chronic disease also. So this will be a key beneficiary for pharma sector also, as 36 life-saving drugs has been completely exempt from the basic custom duties, as well as there were additional 35 goods for EV manufacturing, EV batteries, as well as 28 for 28 components for mobile phones batteries has been completely excluded from the custom duty. And last second is the that government has continued to exempt some basic custom duties on raw materials for which are used in ship manufacturing or for the ship repairments for next 10 years. So this shipbuildings company will be also mainly focused after this post budget. Next is that income tax payable, which was the expectations of the streets, but not much that government will reduce the income tax slab rate for the middle class. But surprisingly, government has done that, and up to 12 lakh, there is a no income tax payable, and post that 12.5 lakh income tax person will be levied tax on the as per the income tax slabs for the new tax regime. Coming to our key expenditures, like what were the key expenditure trends for the budgets. So from FY17, so not major has been a significant change in the government expenditure. So as we can look from FY17, government or Indian economy is paying major capex on interest rates. We can see secondly is from transport. So it was previously around 11% run rate, and now it around 10%. Third is defense. So more or less, as I said on the earlier PPT, so defense and rail, which is including transport as well as your roadways, has not majorly changed in this budget. So you can see there has been a flattish changes in these sectors or the expenditures. So more or less, the expenditure was on a similar pattern as earlier. Coming to the receipt trends and expenditure trends, we can clearly see the revenue receipts has been slightly on an increasing trend, as well as we can see a good thing happening is the capital receipts is going down. So majorly होता क्या है कि आपका जो revenue receipts अगर से ज्यादा revenue आए तो वो better रहता है एज कम्पेयर टू कैपिटल रिसिप्ट। सो कैपिटल रिसिप्ट में क्या होता है कि गवर्नमेंट अपना जो एसेट्स है वो सेल करके मनी रेज करता है या इनकम जनरेट करता है। सो दिस हैज बीन टेकन वाज डाउन ट्रेंड एज वी कैन सी रेवेन्यू रिसिप्ट हैज बीन इंक्रीजिंग। सो दिस इज a good sign for the Indian economic, as well as on the expenditure sides. We can see the revenue expenditure is on increasing trend, which is good for the company, good for the Indian economy, as well as we can see capital expenditures has also more or less on a similar trend. Coming to the fiscal deficit trend, so earlier it was around in 2021-22, fiscal deficit was around 6.7%, and now it is estimated it will be on 4.4%. The government has targeted a fiscal deficit of 4%, which is a 5-year low from the 6.7%. So this is a key positive for Indian economic. Now, the lastly, what sectors to be focused post budget, and what stocks to be focused. So your sectors which will be on focus will be consumption, as we have seen agricultural has been supported by the government, as well as the tax rate has been cut down by the governments. So these key developments will help to boost consumption sectors, as well as your FMCG and all sectors also. So which includes consumption sectors. Favorable pick will be Blue Star Limited, PG Electroplast, which is in consumer durable. It is in EC component manufacture, so it will be indirectly benefit from this. Second is LT Foods, which is in FMCG sectors, and lastly is from trade. And second sectors will be water infrastructure, as we have seen in the earlier PPT that government has continued with some capex line, which also include Jal Jeevan Mission. So water infra will be more or less on a neutral side as well as on positive side. So with this, the key stocks to be focused on this sector will be Vatek Baba, EMS Limited, and Just Engineering. So Vatek Baba is basically into water purifications, as well as into the water waste treatment, and also EMS also in the similar business of Vatek Baba. And interestingly, Just is in the manufacturing of these components which are used in water treatment, such as gate or valves. So these are the key three stocks which will be in focus post budget in water infra. Third is shipbuilders. From shipbuilders, our preferred pick will be Mazda, as we have seen in the earlier PPT that government is continuing with some key things, key custom duties that had been cut on the shipbuilders side for the next 10 years. So Mazda will be a preferred pick for these sectors. Second is hotels, as tourism, as government has said that they will develop a 15 tourism places, as well as they will support the tourism infrastructure also. So hotels will be most beneficiary, as well as hotel sector is on a tailwind, as they have performing good, and they are seeing a good demand from the consumption side. So Indian hotels, Lemon Tree and Chalet hotels will be our preferred pick. Next is from the auto sectors. As we have seen, the government has supported consumption as well as agricultural. So if agri sectors is doing good, so your tractors will be well in consumption, as well as if rural consumptions boost up, your two-wheeler sales will be seems a good post budget. So our key preferred pick will be Mahindra and Mahindra, Tata Motors, and from two-wheeler side will be a TVS Motors. As we have seen that there will be a cut on basic custom duties will be cut on the chronic as well as the cancer treatment tablets. So pharma will be also in focus. So our preferred pick will be Sun Pharma and Cipla. So thank you all. I end the presentation here.